Meanwhile, here in Canada, we've seen growing beliefs that the rate cuts are coming, not as soon as tomorrow, though, when the Bank of Canada is set to meet again and make a decision on interest rates. At least that's based on the Bay Street consensus. So a lot to discuss here, and joining us to do just that is Dennis Mitchell. He's CEO and Chief Investment Officer at Starlight Capital. Good to see you, sir.
Good to see you too, John.
Okay, first of all, what do you make of the mood of the markets at this point after the recent rally?
Well, it's clear that we're in a transition period, right? Whether you think rate hikes are done or not, it's clear that we're closer to the end or done, right? And now the question is, okay, how long are we going to be at this level before we start to see rate cuts? And as data comes in showing inflation is coming down, unemployment is starting to rise, people are starting to pencil in rate cuts sooner and more in Canada and later and less in the U.S. for 2024.
Do you think an investor should be trying to play the economist game here and predict when rate cuts start coming down and I guess what happens to the economy throughout all of this?
Well, you know me by now, John. I don't think investors should play at anything. I think if you look on balance, what is the greatest probability going forward? You know that there's still 100 to 150 basis points of rate hikes that are going to impact the economy through the balance of this year and into next year. So that is going to put further downward pressure on economic growth, on inflation, and so that I think is a safe assumption to put into sort of your economic toolkit when you're trying to decide which equities to buy and where to have your allocations.
And with that said, what do you think the Bank of Canada is going to do or say tomorrow?
I think the Bank of Canada is what they're going to do is nothing, right? They're not going to raise interest rates. They are not going to indicate that that is going to happen anytime soon. What they will say is that they remain vigilant, they remain data dependent, and that on balance, risks appear on balance and that they are concerned about the outlook going forward. They'll remind people that there are still 100 basis points of rate hikes to hit the economy. And I do think they'll mention the housing market. I know we're going to talk about that, but Tiff Macklem did, when he spoke to Parliament, mention his concerns about refinancing waves in 2024 and 2025 and how that might influence economic output given how much interest rates have gone up.
Okay, well, I'm glad you took us there because joining us now is Ari Alstetter. He covers the real estate market for Bloomberg News, and we mentioned in our newscast this morning that we got new numbers for Toronto's real estate market. Ari, can you recap for us, what's the key takeaway from this latest data?
Well, the headline number is that prices are down again for the fourth month. It's about 1.7% hit to the benchmark price, seasonally adjusted in November from October. So overall, the weakness in the market is continuing. And there's no question that what's driving that is higher interest rates, which have driven out buyers and started to put pressure on homeowners who have a mortgage that may need to sell.
On that subject, Dennis, of the mortgage situation, the most bearish economy and market watchers who I've spoken to seem very concerned about the next few years, given we have shorter duration mortgages in Canada, and you'll continue to see mortgages roll over and people need to refinance, and there will be almost like continual sticker shock for Canadians unless interest rates were to come down. Well, how are you viewing that?
Well, I agree. But one caveat, the housing in your home is probably the one asset where people will make conscious and definitive sacrifices elsewhere to maintain, especially if you're a young family, right? And you've got young children, you don't want to uproot them. What I would say, however, is that ironically, now is probably the perfect time to take out a variable rate mortgage, right? So for those who are in variable rate mortgages who can suffer sort of the payment shock for a year and a half, I think they'll actually skate back on side given the forecast for interest rate cuts out of the Bank of Canada.
And just in terms of the housing market, especially in cities like Toronto, how much of it is equally complicated by the fact that supply has felt tight for a long time already?
Yeah, well, there basically isn't enough supply to address the demand that's hit the market. And a lot of that is driven by the federal government. If we are going to add 1.5 million immigrants like my parents to the ranks of Canadians, we've got to have a place for them to live. We are short millions of households, whether you look at it as seniors housing, apartments, single family homes, student housing, we're short millions of units. And so far the plans that I've seen call for 10,000 here, 20,000 here, 100,000 there. We're not nearly bridging the gap for the number of households we need now, let alone the ones we'll need in the future.
Ari, what do you say?
Well, Dennis is absolutely right. The big picture, multiple levels of government and agencies and task force that have looked at this say there is a shortage of housing in Canada. That might be hard to square with the recent declines in prices we've seen in places like Toronto, but that is really just, most people think, a sort of short-term stress that the very high interest rates have cleared buyers out from the market, sales are at a very low level, and that has caused a buildup in inventory as more and more people who have mortgages that are floating rate, have mortgages that are up for renewal, may find the stress is too much and they need to list. That has happened the last few months, but already the latest data from Toronto suggests it may be turning around. New listings, which have been rising and driving that buildup through the middle part of the year, declined for the second month in a row in November. New listings went down 5.5% in Toronto. And so if that buildup in inventory starts slowing down, then the more fundamental drivers of the market that Dennis is alluding to could take over again.
All right, so obviously we've got new housing data to chew on in Toronto. Dennis, every day here at Bloomberg, we look at the data, we listen to what the central bankers are saying, but we started this conversation by highlighting some comments from Mohamed El-Erian, who seemed to say that at the end of the day, the market is listening to whatever it wants to hear, as opposed to perhaps some of the continued messaging from central bankers. That dynamic itself, do you have to be aware of that maybe those central bank messages don't carry as much weight as they might have in the past?
Well, that is a concern, and that's why the Federal Reserve in particular speaks often about, well, commentators about the Federal Reserve talk about its credibility. Basically, its ability to jawbone things without having to actually make definitive interest rate hikes or interest rate cuts. And so if the Fed loses credibility, then people will stop listening to what they say and just pay attention to the economic data points and what they dictate that the Fed should be doing. A great example is this. The Fed has commented on the fact that long bond yields have gone up significantly, and that has done a lot of the hiking and tightening for them. If investors start bringing long bond yields down again in anticipation of rate cuts, well, that undoes the work that the Fed was leaning on to justify no more rate hikes. So that's an example of a scenario where you really do need to pay attention to the Fed and what they're saying, and market participants who don't run the risk of sort of undercutting their own investment positions.
All right.